Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to dive into Latin American cannabis markets. There's a report from Investor Business Daily, as well as a couple reports from the Brightfield Group regarding Latin America. On the line with us is Dan Kimmis, our CBD correspondent with Good CBD Products.
Hey, good morning. Good morning to you, Chronic. You're looking really good today.
Appreciate that. So the Investor Business Daily asks why the future marijuana superpower could come from this region. So diving into that article, it says, quote, the upshot is a flood of cheap weed from the region that could force big producers in the U.S. and Canada to rethink massive investments in indoor climate-controlled grow houses. Some executives and analysts predict they might disappear further down the road or be repurposed. North American marijuana companies are already putting down roots in countries like Colombia, Peru, Brazil, Argentina, Uruguay, and Chile. Sourcing that product from South America could fatten profit margins and reorder the global supply chain. Quote, in fact, we don't believe the North American hemisphere will be leading the cannabis cultivation industry in half a decade or less, said Joseph, the CEO of a U.S. cannabis producer, Curaleaf. He said, we will likely be importing cannabis from the Southern Hemisphere and from countries such as Uruguay, where we can't possibly compete with those inputs. I would definitely agree, and I would even add on Puerto Rico. We've talked about that a lot in this podcast. That gives a lot of tax advantages and benefits. And so I have no doubt that Brazil will be growing a lot and probably processing partly in Puerto Rico and these other places in Latin America.
That's my bet, Chronic. I'm going with the whole international sourcing, et cetera. And, you know, I do. At the pace that we've watched the industry run for the last 5 years, I think the next 5 years you see that accelerated pace. It wouldn't surprise me at all if sometime in the near future we're talking about, you know, weed traveling from Canada, you know, all over the place, right? And shortly thereafter, of course, coming up out of the Southern Hemisphere. Of course, it makes sense. And in fact, I'm looking forward to it because I got to figure they got some sweet strains down that way.
They do. There's a great terroir down there in Colombia, for example. And just looking at normal commodities like coffee, the article goes on to say coffee, cut flowers, and other agricultural products from Latin America have been bulk commodities. The pod industry insider increasingly believes cannabis will follow suit as more nations legalize it. Marijuana companies able to capitalize on the trend could get an edge as the added competition lowers prices. Meanwhile, Canada's producers are struggling to meet towering expectations, and the heightened interest in Latin America also comes as investors in cannabis stocks seek the next frontier for big returns.
Everybody's looking for that big dollar return, right? And here's the deal. When you start looking at infrastructure costs and you realize that, you know, the pricing advantage somebody growing quality outdoor weed has to somebody trying to grow quality weed indoors, certainly that controlled environment, yeah, it's pretty handy, but at the same time, my gosh, does it add a lot to that cost per gram, brother?
Exactly. And looking at places that are really affordable in terms of human capital labor, you're looking at Argentina and Brazil, Peru, Paraguay, and Chile. They allow for the least degree of medical marijuana usage or cultivation, but legal framework or business remains stiff or underdeveloped. Legal business within those nations is expected to remain relatively small in the next years ahead. And the research firm BDS Analytics forecasts that legal spending on medical cannabis within those nations, excluding Paraguay, will reach 547 million by 2024. Mexico's 441 million will make up the vast majority. By contrast, BDS Analytics expects overall legal spending in the U.S. and Canada to swell to 34 billion over that time, but insiders see huge potential in Latin America.
You know, some numbers, some granular numbers for you. I think you know I offshore, right? So I do some things where I use some international labor. So for instance, my administrative support labor, okay, I pay $5 an hour, and that's top end of the pay scale where they are, okay, $5 an hour. And they're awesome. They're way better than I am, okay? So if you can imagine, again, looking at those kinds of numbers where you're talking about farm hands, you're talking about 10, 20, 50 people, right? And you're paying them, you know, again, high end for their pay scale, and low end for what you're used to working with domestically. And again, in terms of cost of deliverable, what's it take to make that gram and put it in a store? There's no way you can be competitive if you're producing domestically, competing with that. You can't.
No, in Canada alone, it costs $1 to $2 to produce a gram of dry bud indoors, according to this article. I believe it's actually $1.74 that these publicly traded companies are expecting to sell for, and that's ridiculous because we're seeing 7 to 8 cents a gram here in the States. And so the article goes on to say that much of that, the expenses is from lighting and temperature as the seasons change. But in Colombia, the cost shrinks to 5 to 10 cents when growing in the open air. Labor costs in Colombia are also far lower, which keeps those costs lower. They sit somewhere between around $15 a day in Colombia. And there's private equity firms down there weighing possibilities of investment in the region. Colombia already supplies a huge portion of the world's cut flowers. The skills that in that line of work translates well into the growing and trimming cannabis plants. So there's a lot of transferable skills there. There's a low cost structure in Colombia. They argue it could help those businesses weather any global drop in CBD prices. The risk looms larger as more marijuana companies enter, from tinctures to muscle wraps. Other Canadian companies are using Latin America as a node on their global supply network and as a springboard into other markets. Tilray, for example, is a top producer of medical cannabis. They have a pharmaceutical supply distribution agreement in nations like Peru, Brazil, Argentina, and Chile.
Yeah, you might be able to get that number until you open your borders. Okay. And then the moment you open your borders, no, you're not going to get that number anymore.
So North America's cannabis market is, quote, in short-term opportunity created by a regulatory environment that's going to go away, but your long-term planning has to face the facts of the basic rules of any agricultural product, which is that Colombia can produce it cheaper. So with that, that brings us to an article from the Brightfield Group about entering the fold, CBD and cannabis in Latin America, a 2019 report. So as Canada, Europe, and the United States makes advances in CBD and cannabis, there have been growing conversations around Latin America and its potential to be the next booming market. The region, however, is not structured in a way that primes it for either industry. Europe similarly is vastly fragmented when it comes to CBD and cannabis regulations, political environments, and consumer behaviors. With a higher income per capita and more developed regulatory infrastructures, it's not surprising that even a fragmented continent like Europe can adopt CBD and cannabis quicker than Latin America. So why is Latin America different? Well, Latin America has a complicated history with cannabis due to years of violence stemming from the drug trafficking in the region. While many Latin American governments are finally taking steps to create legal markets for cannabis and CBD, business opportunities for domestic retail sales are still limited in the majority of the region. On the other hand, CBD products provide a welcome alternative for countries with a high level of stigma towards marijuana and the importation of non-psychoactive oils, avoid competition with or diversion to the illicit market. So from a decriminalization and home growth to medical programs and CBD, there's a lot of moving pieces across the entire region of Latin America. Each country has its own culture and politics to take into consideration, and it's likely we'll see promising numbers from both cultivation and retail in the coming years. The near-term opportunities for CBD in Latin America are more promising than for marijuana as the continent struggles to shake that stigma and negative legacy of the war on drugs and powerful drug cartels. So this graph shows that the rise in CBD from 0 to 500 million in sales is a dramatic increase relative to medical marijuana that went from 0 to 100 during that same period or estimate over the next 4 years. 4 times.
Well, think about it. You know, this is the thing. For CBD, if it turns out that it's as useful as it seems to be, right? And if it turns out that we are all, for the most part, CBD deficient, right? Where our system basically is running at a low, right? Like not having enough oil in the car or something. Well, that makes pretty much everybody a customer, literally everybody, right? You could be, a housewife in Germany. You could be a young man in Uruguay. You could be an old guy sitting in Oregon, okay? It makes everybody a customer, and that's a little different than something like, THC, where you're like, I'm looking for the people who want to party. And this is where, again, the reality of, how do you tell the future, right? And just go look at the future a little bit, figure out what hasn't been done in the cannabis or CBD and wellness space that is in normal business right now, and go do it. And again, go look at tomato distribution. Okay. Mimic all of that stuff and get ready, because somebody's going to come buy all the pieces that you make from the perspective of, if it hasn't been done yet in normal business in the cannabis side, it will be. It's coming.
Yeah, and it could be Mexico, it could be Colombia, it could be Brazil. So looking at this this report on cannabis opportunities for Mexico and Colombia, looking at which countries are leading the way. Well, for Mexico, you're looking at medical marijuana products that are expected to remain accessible for only upper income segments of the population who can afford imported products, with unit prices that are subject to exchange rate fluctuations. The current administration has expressed favorable views towards the legalization of recreational cannabis. However, the federal government's first priority is likely to be the regulation of distribution of medical cannabis products. The Supreme Court's decision overruling the prohibition on cannabis ownership and consumption in 2018 was an important first step towards recreational legalization. A full regulatory framework is expected in late 2019, probably 2020, which may open up additional commercial opportunities in the country.
More opportunity, Chronic. More opportunity.
Including Colombia. So the article goes on to say, quote, there are significant growth opportunities in Colombia for companies looking to cultivate cannabis and export from Colombia. In 2018, Colombia received a production quota of 40.5 tons from the International Narcotics Control Board, nearly half of the total 91.9 tons authorized globally. So Colombia's taking half of the global requirement already.
We're talking about putting the mobile unit in Colombia for a little bit, right? There's a lot. It's surprising the amount of international business in the cannabis space that is happening right now, today, right this moment in Colombia. And so the whole thing of, again, as you know, our mantra, be on the ground, go see where it's happening. So I'm kind of excited about that because, again, there is a lot happening, quote unquote, down south.
Definitely. Colombia is spotlighted because they have favorable weather, good soil, and 12 hours of daylight year round. But there's also Brazil. So Brazil has allowed for the import and pharmaceutical products derived from cannabis on a patient-by-patient basis since 2015. The market potential for CBD products in Brazil is huge, according to this report from the Brightfield Group on Latin America. So the expectation is that approved high THC products will be limited to oils and sprays, and that the Brazilian government will not take any significant steps towards increased product availability in the near term, particularly for products that are reasonably priced for the average Brazilian. So which CBD products will be the most popular in Latin America? Similar to the United States, topicals as well as skincare and beauty products are likely to be long-term leaders in Latin America. They're currently available in Colombia and will be on the shelves in Mexico by the end of this year or early 2020. The current landscape for CBD products in Latin America is mostly limited to tinctures, which are used to address specific medical conditions such as epilepsy. However, retail markets continue to open. Topicals and skincare and beauty products will appeal to a broader range of mass market consumers looking for more general health and wellness and functional products. The lower price tags on lotions and skincare products will also help these gain traction among a larger segment of consumers, especially given the low per capita income in the region relative to other markets like the US and Europe.
Let's face it, wherever you go, there's a lot going on. Brazil, geez, that sounds fun. I'm going to have to go to Brazil, Chronic.
I spoke to an individual who's growing 124,000 hectares in Brazil. That's about 306,000 acres or something like that. And it's a lot of product. And so in order to bring that into, production and end use derivatives like CBD, it requires a lot of equipment and automation, as well as distribution channels. You have to be able to get that into places like Germany with 70 million patients. But I do expect that there's other areas that are going to be utilized, like Puerto Rico, taking advantage of the 4% corporate tax cap, 50% tax credit, and 100% tax deductions. Yeah.
Yep, big ag, international big ag, big time.
Well, and all CBD companies as well. I think that 98% of CBD companies will fail unless you have an entity in Puerto Rico. That's for US based companies, because again, all those tax advantages are for US companies. But nonetheless, there's a huge advantage and opportunity in Latin America. You're going to have to come back and check out what's next. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.